Hello, this is the TradeTech U.S. Stocks and Futures Market Preview for Thursday, the 13th of September, and Friday, the 14th of September, 2018. As usual, we don't typically do a market preview Thursday night going into Friday because most of the week has already played out. This week will be no different for a couple of reasons. Let's talk about those two reasons before we look at the market. First of all, we have the quarterly contract roll of the futures, which means that we are moving from the September to, can you believe it already, the December contracts Thursday night going into Friday. And what that typically does is take the big players out of the market because the technicals get misaligned. And we teach this in our class. You can look at it more definitively when we look at the module about it. But at the end of the day, it's usually a pretty boring session on Friday and even sometimes on Thursday as they move the money out of the September, which is the U contract, into the December, which is the Z contract, and wait a day or so for those numbers to start to calculate properly with the volume that they're going to see. So again, I'm not going to get in too deep right now, but it typically means a dead day, both Thursday and Friday, certainly Friday. Having said that, we also have this massive storm bearing down on North Carolina, South Carolina, and I guess Georgia now. It's pivoting a little bit, and that could mean some damage and other things. In what is, I mean, if you don't know the Charlotte area in particular in North Carolina, which I do, it's a very big business area for banks. One of the sixth largest in the world, actually. So, you know, a big storm heading that way and a lot of rain could cause some damage. We'll see. You know, you never know. Obviously, it's a bigger problem for boats and everybody along the coast. But we'll see what kind of damage this thing causes. It hits Friday and going into Saturday, Sunday, and the weekend. By Monday, we should have a pretty good idea of the damage, and it hopefully is done by then. But they're talking about this storm potentially settling in against the coast and just dumping a bunch of rain for a while on the area. So that would be the worst scenario. So there's a lot of people on the East Coast in general that are shifting, moving, got family members, everything like that. You know, it is what it is. It does slow the market down, and so does the futures contract roll. So we're just going to focus on where we're at. And again, I wouldn't expect Thursday and Friday to be super exciting. I wouldn't use full size. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form, which is the proper way to look at the market. We're sitting right on the highs from back in January, and then we've broken out of those, pulled back, and we're sitting on it. So as you know with breakouts, the way it works is that you break out, you pull back, you retest. If you turn up from there and take out the highs, that's a run. So anything over 29.20 should be good on the S&P. Having said that, the run up in August was in August, which is the most positive month of the year when nobody's around and there's no volume in the markets. And now we're back to September, which is the most negative month of the year, and we've got this other stuff happening. So I don't know that you can look at the technicals right now and say, oh, this is a cup breakout that's retesting, and we're going to turn up. We may not turn up. And if we don't turn up, then the failures off of these things are often pretty ugly, and we're also entering that horrible time of year, September and October, where when the markets don't work, they don't work catastrophically badly. So let's find out what happens. Let's go through the major indices. Crude oil down 17 cents, which is down, but still at $70.20. That's back up from where it's been recently. Gold up $1.30 to $12.20. The S&P cash index literally up a point, so the market's not really moving here with everything going on. NASDAQ 100 down 19.81. The SOX down 15.87. It was lower. So this thing has now retraced the entire move it got off the 13 buy signal bounce. So if you look at this chart, for example, way back last November on the far left, you got a 13 sell signal and it sold off, then bounced. Here in August, we got 13 buy signal. It bounced pretty well, but now it's retraced all of that as well. This is not, the semiconductors have not gone anywhere. I don't know how you get the market to go places if the semiconductors don't lead them. Biotech's up $1.73, sitting where it was back in January. The VIX down 8 cents at $13.14. The trend closes at 0.7. It's low, puts the 10-day moving average at 1.07. Let's count backwards. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the biggest number that's going to drop off is 2 days in. So this was Wednesday. So by Monday, by over the weekend, that big number near 2.0 will drop off. If we get too low readings, that moving average will drop quickly. And remember, the key on the trend is that a 0.85 or lower moving average, 10-day moving average, is a sell signal on the broad market. 2.3, almost 2.4 billion shares on the NASDAQ. It's above what we've been seeing, it's above the last couple of days. It's not quite as big as a couple of days last week. Advanced decline ratio on the NASDAQ, negative 182. The moving average, negative 181. Advanced decline ratio in the New York was plus 323, so it was positive on the session. Google loses $18.39, still does not quite get a 13 sell signal. Apple, with their presentation about their new phone, down $2.78. Netflix gains $14.02. Amazon up $2.85. Tesla up $11.10. And remember, this is the trigger off of that floating island below. So we had the floating island on Monday. We gapped down. Tuesday we came back up, right? And with that gap up, so that leaves that island day below. So it's just a whole day of trading below everything below it. Wednesday, I'm sorry, that was Friday, and then Monday the gap up. Tuesday was intraday, meaning it was just inside of the range of Monday, and then it's today, Wednesday, where we finally break out of the highs of Monday. That's the buy signal, and it worked. So if you're looking at that, again, Tesla has left behind an island reversal, and it's also an island reversal off of, if you go back and look at the lows of April, the same levels. It's also, we had a 13 buy signal in May that led to a rally. So Tesla just likes that 260 area. If it ever breaks it, get down to 220 or something like that, look out. That stock's probably done for a long time. TLT, the 20-year bond ETF, 118.94, up 28 cents. This thing's been nowhere for a long time as well. Goldman Sachs down $2.06. This is the most boring year ever on Goldman, and it's heading back towards the lows. Facebook down $3.94. All right. In terms of the the intraday action, so we had a fairly flat opening on the ES. We went lower. We popped heading into lunch. We pulled back, and that was the range was already over at that point. The afternoon was boring, as it usually is. Apple sliding did not help. NASDAQ side actually gapped down just a couple of points, which is so minor, but could never fill the gap. Went lower in the morning, popped over lunch, but never got back to the highs of the early part of the session and closed around there. So that's it. We did not have the most exciting day. Now, with 2 days left in the week, what do we have to deal with? All right, a couple things. Let's focus on this. So number one, Thursday, we've got the CPI. That's one of our big numbers. We've got unemployment claims. That's the weekly, initial, and continuing jobless claims numbers. Those are an hour before the bell. That could cause the gap. Number two, we got the natty gas number an hour into the market. We've got the 30-year bond auction at 1 p.m. We've got the federal budget balance at 2 p.m. Eastern time. Okay. Then on Friday, with this still left in the week, retail sales and import-export prices, they got pushed because they got pushed for whatever reason. So import-export prices. And then capacity utilization, industrial production, preliminary, first of the month, University of Michigan sentiment, and business inventories. There's still a lot of data left. I just tend to tell you that in general, because we're rolling the futures contracts, the quarter contract roll, plus we're going to have this storm. I wouldn't expect a lot, but you never know. Let's just show up and see what happens. We'll be around early. If there's no action in the first hour or two, you know there's not going to be any action in the afternoons. And then we'll get to next week after the residual of this storm, get back to work. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and Friday.